Unveiling the Warren Buffett indicators like never before. Now, this is the most updated Warren Buffett indicator, and you really need to watch this video. You must tell friends that things going to happen big time in the market. Let's go. Now, first of all, disclaimer apply as usual. And of course, guys, you must understand that in the market itself, we need to know a lot of information to make our trading better. And I'm sure you guys know that very well. Now, one thing to note now is that the Federal Reserve now, the reserve that they have has fallen below the $3 trillion mark. Now, what does it mean then? Well, basically, if you actually know this guy, his name is this Mark Cabana. He is the former New York Federal repo guru. And in fact, he says that the level of confidence is around $3 to $3.2 trillion. And of course, right now we can see that it has went below the $3 trillion. And this is something that they are not comfortable at all. And of course, based on the US Treasury securities yield indicator, it's pretty clear that we are having the dip sign at the moment right now, and it's moving towards a potential recession indication. And of course, this is not going to be good if you just continue in this market. And if you look carefully, you can see that Barkin says that he's preferred the Fed to keep the rates more restrictive for longer period. And of course, that's the reason why the US dollar has been raising up recently. And of course, all this speaks volume of what may happen in the near term. As you can see right now, the 10-year versus the 3 months US Treasury yield curve is now showing a recovery. And of course, we all know that the fact is that when that happens, we are always very, very near to a potential recession. Okay, you can see that every time when the deal went below the zero mark, and once it recovers, and that is where you get to see the inverse has inversion has went back to normal. And when that happened, you can see that it always will trigger a recession. And that is something that I have been explaining and been sharing. And I said before that based on the last time that it inverts back, that from here it inverted and then now recover, it'll be about 18 months period, and now it's all happening. So by March to latest June, July period this year, we may see a problem. And of course, this not only happened since 1985, it happened as far back as 1929, where we got into a very serious recession back then. So with all this information right now at the moment, you can see pretty clear that the US Treasury yields and the US GDP is showing a very clear indication of a potential recession coming in as the GDP is not moving. And of course, if unemployment data do come in and trigger, then we're going to have a lot of problem coming in. And again, that's the reason why I am very, very worried of the US market for 2025. And now I want to bring this guy in. His name is Warren Buffett. Now, for those people who doesn't know him, you must be somewhere in the rock. Now, this gentleman, he is Warren Edward Buffett. He is an American investor, and obviously, he is the CEO of the Berkshire Hathaway. Now, to make it simple, this guy has made so much money in his life through investment, of course. Now, the thing is this, look at how he grow his business. You can see that it really outstripped the S&P total return index, and he's doing very well. So we know that who's Warren Buffett, but why am I talking about him? Now, basically, it's all right. Now he is going into 2025 with his biggest cash pile in 20, 30 years. Okay. And of course, we all know that Warren, when he do that, he is very clear that he knows that the market now is kind of overvalued. There's no reason to buy stuff. And in fact, he has been selling. He had been selling his largest holding, which is Apple and Bank of America, and sold $133 billion worth of stocks. So that's the reason why he has so much money right now. And one thing to note, if he's selling, what he's trying to explain to us or trying to tell us that basically something is wrong. And I'll show to you now the most updated Warren Buffett indicator I have seen for a longer time. And I'm going to the chart right now to show it to you. Okay. So this thing is the Warren Buffett indicator. It's on currentmarketvaluation.com. You can go there and take a look. And of course, you can see that this is the Buffett indicator, the total US stock market value divided by the GDP. And at the moment right now, we're at 208%. Now, what is this number all about? Well, you can see that basically based on the Buffett indicator, the US stock market value to GDP now, we are actually at the third standard deviation level. Now, this is a very, very high level, and I think that the market is going to take a break very soon. And based on that itself, the current market valuation is really, really high. And of course, we can also see that although the US GDP is following, but it's nowhere near to the current value. So because of that itself, we put it all together, we are definitely at a very high level. And the last time we saw this, the market pulls back, right? The market actually really pulls back over here, and that basically bring down the market by about near 20 to 25%. So with that in the pipeline, you need to be very careful that things may get into a very bad position. All right, and this is the website. You can take a look. Now I'll show you. This is more important. Okay, this is the where the numbers are. Okay, and you can see that the market valuation model, we are definitely now at a very strongly overvalued level. Now, the last time we saw this, it was back in 2021. We all know the market went up first, but because of COVID, and then after that, the market pulls back significantly. The last time this happened again, that was back in 2000. We all know that was the Nasdaq crash, and then you go back again, it was back in 1969, and of course that was not, I'm not born yet, but all this speaks volume. And of course, you look at the price earning model, we are also at a very overvalued position. The interest rate model also overvalued, and of course the S&P mean reversion model strongly overvalued, and of course the earning yield gap, we are still also still okay, but definitely for sure the recession indicator model, we are definitely at a very high recession risk. Okay, all these are numbers that is in the market available for you to do your back testing. And of course, the SAM rule, I have told you before, guys, we have already breached up the 0.5 marker level, and now we are already at a very high 0.57. And of course, every time when this actually happened, we get a recession. This is something that has been proven since 1950. So it's very clear that all this are telling us that that's the reason why Warren is taking money out from the market. And of course, VIX recently has moved up a little bit. I think VIX will climb back up again to about 30 to 50 range in the near term. All right, so this is something that you guys can go online and take a look. But most important thing is, guys, be very careful. Things gonna happen by March to June, July period. This is Cal signing off. Hope you enjoyed this video. Bye-bye.